Most traders step into the market thinking the enemy is out there. They believe the danger lives in charts, news, or price action. But the market is not against you. It is indifferent. And that indifference is what makes it so brutal. The real battle isn't fought on the screen. It's fought in your own head. Every hesitation, every impulse, every hope disguised as logic. These are the cracks the market exposes until your capital bleeds away. This is why so many fail even after years of study. They master indicators, memorize strategies, and chase the perfect system, only to discover that none of it matters if their psychology collapses under pressure. Trading isn't about predicting. It isn't about control. It's about surviving your own mind long enough to let probability work in your favor. And that's the promise of trading in the zone. Not a secret strategy, not a hidden code, but a mindset. One that stops fighting the market and starts mastering the only thing you can control: yourself. The first mistake traders make is believing the market is their opponent. They treat it like a predator stalking them, waiting to take their money. But the market doesn't even know you exist. It moves with or without you. The only thing it reflects is the way you engage with it. Fear is not in the chart, it's in you. Greed is not in the candles, it's in your reaction to them. Hope doesn't come from the market. It comes from your refusal to accept what's right in front of you. The market is neutral. You are not. This is why two traders can look at the same setup and see two completely different stories. One sees risk, the other sees opportunity. Neither is seeing the market clearly. They're projecting their own psychology onto it. I learned this lesson the hard way. I blamed charts, brokers, news, anything outside myself. But every failure was rooted in one truth. I wasn't ready to accept responsibility. The enemy wasn't external. It was internal, and it wore my face. The market is a mirror, not a monster. What destroys you in trading is rarely the market itself. It's your habits, your impulses, your inability to step aside from your own emotions. And until you stop fighting shadows outside yourself, you'll never face the real opponent. Which leads to the first breakthrough every trader must confront: the 5 truths that strip away illusion and expose reality. The foundation of consistency rests on 5 truths. They are simple, but brutal. And most traders never live by them because each truth kills a comforting illusion. The first: anything can happen. This destroys the illusion of certainty. No chart, no pattern, no analysis guarantees the outcome. Every trade is just one roll in an endless game. The second: you don't need to know what will happen next to make money. This dismantles the illusion of prediction. Survival comes from managing risk, not from fortune-telling. The third: there is a random distribution between wins and losses, even for a strategy with an edge. This ends the illusion of control. You can have 10 valid setups and half may fail. That's not broken. That's probability at work. The fourth: an edge is only a probability, not a promise. It's the odds tilted slightly in your favor. Thinking otherwise turns traders into gamblers, staking their capital on false guarantees. The fifth: every moment in the market is unique. The past doesn't repeat exactly. The next trade has never existed before. This kills the illusion of repetition and forces you into presence. These truths cut deep. They are not rules to memorize. They are realities to embody. And when you begin to accept them fully, something shifts. The chase for prediction fades. The obsession with control loosens. And you start to think differently, not in terms of certainty, but in terms of probability. Most traders fail because they chase certainty. They want the market to prove them right, to confirm their analysis, to reward their prediction. But trading has nothing to do with certainty. It has everything to do with probability. Thinking in probabilities means each trade is just one event in a long series. The outcome of any single trade doesn't matter. What matters is how you perform over hundreds of trades, each one executed with discipline. The problem is that most traders treat every trade as if their identity is on the line. A win means they're smart. A loss means they're incompetent. This emotional weight corrupts decision-making and blinds them to the truth. Outcomes are random in the short term, but consistent over time if the process is sound. When you embrace probability, you stop fearing losses. You stop celebrating wins as validation. Both become just data points in a larger sample. A loss is no longer a threat. It's an expected cost. A win is no longer proof. It's simply part of the math. This mindset creates freedom. You don't have to be right. You just have to follow your edge. And the more you act without hesitation, the more probability works in your favor. When you let go of the need to be right, you finally start to trade in peace. Which brings us to the forces that pull most traders away from this mindset: fear and overconfidence. Fear and overconfidence are two sides of the same coin. Both distort reality, both sabotage consistency, and both are born from misunderstanding probability. Fear shows up when a trader hesitates to act. They see a setup, but the memory of past losses paralyzes them. They doubt, they delay, and the opportunity passes. The market doesn't punish them with a loss this time. It punishes them with absence, with the pain of knowing they weren't in the game when they should have been. Overconfidence shows up right after a win. A single good trade convinces the trader they've figured it out. They size up recklessly, abandon their rules, and believe the market will reward them again. When it doesn't, the fall is brutal. The cycle is vicious. Fear holds you back until you finally take a trade. Overconfidence pushes you to risk too much. Then losses bring you back to fear. Around and around it goes, draining capital and destroying confidence. I've lived both sides of this cycle. I've hesitated when I should have acted. I've overextended when I should have waited. And each time the lesson was the same. Neither fear nor arrogance has any place in trading. Breaking this cycle begins with acceptance. You accept that losses are normal, that wins don't make you invincible, and that probability is the only ground you can stand on. Without that acceptance, you'll keep swinging between hesitation and recklessness until the account is gone. Every trader begins with the same fantasy. If I analyze enough, if I study enough, if I plan enough, I will control the market. But the market doesn't bend to effort. It doesn't reward analysis with certainty. It does what it does, with or without you. This illusion of control is what destroys most accounts. Traders believe they can will the market into cooperation. They double down when wrong. They hesitate when right. They try to manage outcomes that were never in their hands. The only things you can control are your entries, your exits, your position size, and your discipline. That's it. Everything else is chaos disguised as order. The sooner you accept this, the sooner you stop fighting battles you can't win. Control feels comforting, but it's an illusion that breeds frustration. Every unexpected move feels like betrayal. Every deviation from your analysis feels like a personal attack. But the market is not attacking you. It's just moving. I learned this lesson late. For years I tried to outthink, outsmart, outguess every turn. The result was the same: frustration, exhaustion, and losses that had nothing to do with the chart and everything to do with my refusal to let go. Freedom begins when you surrender control. Not surrender to the market, but surrender to reality. You don't need control over outcomes. You need control over yourself. That's the bridge to consistency. Consistency isn't about being right more often. It's about acting the same way every time, regardless of outcome. That's the part most traders never grasp. They chase results instead of mastering repetition. A consistent trader follows the plan even when it hurts. They cut losses at the stop without question. They let winners breathe even when fear whispers to exit early. Their strength isn't in predicting the market. It's in executing their rules without hesitation. I used to think consistency was about winning streaks, but every streak ended the same way: one reckless trade that erased the gains. That's when I realized consistency is not built on streaks. It's built on habits. Habits that don't break under pressure. The irony is that consistency feels boring. It lacks drama. It lacks excitement. But that's why it works. Excitement belongs to gamblers. Consistency belongs to professionals. Every moment you choose consistency, you compound discipline, and over time, that compounding becomes unstoppable. Not because you avoided losses, but because you survived them and kept going without changing your process. This is the true foundation of trading. Not brilliance, not luck, but consistency. And the closer you get to it, the closer you are to stepping into what Douglas called the zone, that rare state where trading feels effortless. The zone is not a strategy. It's a state of mind. It's the place where hesitation disappears, where fear has no grip, and where overconfidence has no room to grow. In the zone, you don't trade to prove yourself right. You trade because the setup is there. The plan is clear, and execution is automatic. Getting to the zone doesn't happen by accident. It's the result of discipline, repeated so often that it becomes second nature. Each loss is accepted without denial. Each win is accepted without arrogance. You stop chasing outcomes and start flowing with process. The paradox is that the zone feels effortless, but it's built on effort. Effort in training your mind to detach from results. Effort in cutting losses instantly, in letting winners run, in following rules no matter what you feel. Over time, that effort transforms into flow. In the zone, the market no longer feels threatening. It no longer feels like a game of survival. It feels like execution. Clean, simple, free of emotional noise. You're not predicting. You're not gambling. You're responding with clarity. This is why consistency matters so much. Without it, you can't enter the zone. With it, you start to operate on a higher level, where every trade is just another hand in a long game. And in that game, the stress fades, because you're no longer attached to any single outcome. The zone is the destination of every lesson in this book. It's where psychology and probability meet discipline. And once you've tasted it, you understand what trading was supposed to feel like all along. Most traders fail not because the market is too complex, but because they never face themselves. They keep searching for certainty where none exists. They cling to control that was never theirs. They ignore discipline, and they let fear and greed run the show. The market doesn't punish them because it's cruel. It punishes them because it is consistent. But survival has never been a mystery. It doesn't belong to the ones who predict the future. It belongs to the ones who manage risk, who follow rules, who treat every trade as just another event in a long game. It belongs to those who can accept losses without denial and wins without arrogance. That's what trading in the zone was always about. Not tips, not tricks, not shortcuts, but a mindset. A way of thinking that frees you from the illusion of control and anchors you in probability, consistency, and discipline. The trader who embodies this doesn't need to be right. They need only to keep playing the game long enough for their edge to work. This is the line that separates the many from the few. And now you've seen it clearly. The question is whether you will live by it. Because if you do, the market changes. It stops being an enemy. It becomes a mirror, one that reflects discipline, patience, and clarity back at you. And if this message has struck you at the right time, let it stay with you. Subscribe, leave a comment, and share it. Not just to feed the algorithm, but because another trader out there is one mistake away from quitting for good. You might be the reason they don't.